Manny Cho and Jacob Ingerslev. How you guys doing today?
Great.
Doing well, thanks.
Well, before we get into anything too serious, I got to know this first. And is there anything in your life that you feel is just you need to go a little extra custom in it? You need something a little specific that doesn't really come off the shelf, where you want to tailor it, really get that extra mile. Is there anything that stands out to you guys that really makes a big difference?
I think that's how I feel about everything I buy in life. I like to have options. I mean, that's really sort of, whether that's at the grocery store or you're buying a car.
All right. What about you, Manny?
For me, since I need some special measurements in case in case we ever go back to wearing suits again, that's the one piece that I like to have tailored. As I get more experienced, I just need some special care when it comes to fitting well in a suit.
It cannot be underestimated what a well-fitting suit does to both the person wearing it and the people seeing it. I can't emphasize it. It feels like one of those things that you got to get your suits tailored, but it is very nice.
Yep.
All right. Well, the one thing that I want to do is move that over to kind of the insurance side of things and talk about products that do maybe need a little extra customization that aren't as standard as you might find in certain industries that might need a little more attention, specifically around the technology space. Jacob, what do you see around there? Why is there such a need, a little extra special care taken for certain industries like that, to where the risk might be a little different?
Yeah, well, I think particularly with something like technology and cyber, for example, it's a fast-moving area. We constantly see new technology taking over sort of what was a manual process. It's taking over our lives in many ways. Insurance coverage has to sort of keep up with that, and that's particularly true for cyber as a risk as well, which goes hand in hand with tech E&O coverage. And there's this misconception out there that unfortunately that your standard insurance coverages will cover some of these risks, your general liability, your property insurance, and that's often not true. So it's important to be educated on specialist products like tech and cyber for that reason.
And I guess, Manny, from the agent side of things, I mean, where do you think that awareness sits in terms of them knowing, like you said, that gap in terms of what they might be looking to go to sell on the day-to-day basis versus looking for something a little more specific? Do you think that the awareness level is there, or how further do they need to go to really fully understand that?
I think most retail agents are aware of the need for professional liability or tech E&O, and now I don't know who is not aware about cyber, but most would be aware that the policy exists. I think it's really on the client side where you have to do the convincing, especially around tech E&O. I mean, historically, we've seen that most buyers should buy as soon as they have a product that's in the market, being beta tested or being tested in the market. But most don't buy until they have to because of a contractual reason. So it's a very interesting dynamic where once we see the risk, usually they're 2, 3, maybe 4 years into their life cycle, and they need to buy because someone told them they have to now. It's a very strange field. I mean, it's not like a lawyer or an accountant where as soon as they hang up a shingle, they know that they better buy professional. Same with a doctor or a dentist. So it's a little different field for techie.
Yeah, that's interesting. You said when the mandate comes in, Jacob. I mean, does that kind of fit what you guys see on the carrier side in terms of, or I guess the better question is what can be done to maybe further adoption or penetrate that understanding from the client side of things to maybe understand and maybe seek out this coverage before somebody forces it upon them? Is there anything that you guys have seen to sort of help push that along?
I think traditionally the contractual requirements have been a big part of the need to have coverage, and then it hasn't really happened until you're faced with that contractual demand. The cyber aspect of the coverage, though, is um, happening automatically through the media. It's hard not to turn on a TV and not hear about ransomware or open industry publications. I mean, ransomware is sort of it's everywhere now. So I think we're seeing some help from that angle. I think the tech E&O aspect of the risk. I think we continue to do a lot to educate through LinkedIn and other sources and marketing to make sure people are aware that this is not something that's covered in your traditional insurance products. But there's a way to go. but we continue to push ahead.
Manny, is there one sort of conversation, like I guess around like where the market is at currently, that the agents could sort of come armed with to their clients today to say, hey, listen, this is what's going on, this is why it's important. What would you sort of say to them to sort of give them that ammunition to maybe come to that conversation with a better chance to not have a contractual requirement to actually close the business?
What the discussion we usually have around E&O is it's a protection of your assets. If you're a startup and say you only have seed round funding, I mean, you need to spend that money on IT and marketing and product development. If you get a claim in for failure to perform, it could go away, but you also could spend 100, 200,000 in defense costs just to make it go away. You could run into some sort of cyber event where you're spending 40, 50, $100,000 to start your network or to protect yourself against a ransomware demand, and then all the fallout that happens afterwards. So it really is like everything in insurance, it's a proactive measure and a risk management measure to manage, valuable resources, which in most cases for smaller firms is their capital and their cash. So it's a great trade-off, $1 million limit, especially in the program that we have with Hartford today. The cost is nominal, to really protect yourself against a very critical event.
Yeah, claims are certainly the most important lessons learned. With respect to wanting to buy coverage. That's what we see after contractual requests for insurance coverage. When people have had an incident, they understand the value of the insurance coverage.
Well, that's kind of right. Exactly where I wanted to go. Is there anything specifically that stands out from a claims perspective, Jacob, that really provides that motivation, or you find happening more often than not that maybe agents could use as sort of a good example to say, hey, listen, these things are happening more and more frequently, or whatever the case is.
Starting with the tech, and media coverage that's embedded into this sort of product. Specialist counsel certainly adds value. The average attorney may not have the expertise or specialism to respond or deal with a breach of contract claim or an intellectual property infringement claim. So I think there's value added to that angle from a claim perspective, where we worked with specialist claim counsel that have tremendous experience in this area. The cyber particularly, that's where you really see the value added coming through. Fortunately, most companies that get hit with a cyber attack hasn't happened to them before. But that also means they don't really know necessarily what to do if their entire network's infected, and they can't even open the email. This is where the policy really comes through in terms of the incident response services that come with the policy. So typically, cyber coverage has incident response providers sort of associated with the policy. Breach coaches, those are the lawyers that help companies understand their obligations when it comes to a privacy event. There are many different complicated pieces of regulation to keep up to speed with, and the average company probably isn't going to have that expertise in house. So that's important. If we take ransomware as an example, it's sort of a whole process where your network gets infected. You then get presented with an extortion demand. Usually that can be negotiated. A lot of companies may not know that, but incident response providers handle that negotiation. They have a lot of experience doing these negotiations from all of the incidents that they've handled. So they know maybe exactly sort of where you can go to based on the impact to the network in each case. The more practical side of it is most demands are paid in cryptocurrency. I sold mine at least. I don't have cryptocurrency in my wallet currently, and I think that's probably true, at least for small business on average, that they don't have cryptocurrency in an account that they can readily use for extortion payments if they're required to do so. That's really the key to cyber claims handling is having all of those resources available with a cyber policy or tech E&O policy that has cyber coverage.
Man, I don't know if you maybe have something off the top of your head, but is there an example to where, a company had to rely on those services and sort of the reality that they were met with that, again, we hear about all this stuff, right? Claims response, all of this sort of, hand holding during the process, but is there something that really stood out to them in terms of how valuable it ended up being during that situation?
Yeah, I would just say the services are so valuable that even with the rise in premiums and some of the coverage changes that we're seeing for some industry classes, we have insureds that are asking to buy a minimal level of policy just so they can have access to the resources that are provided. The breach coach is invaluable. It's like being in an NFL team, you're either going to go to the rookie, to start the Super Bowl, or you're going to go to the vet that's been there 6 times, and knows the playbook very well. They're very experienced. They know how to handle things, and they have at the ready a number of resources to help mitigate the loss. I mean, the biggest thing that you need in these events is to mitigate the loss. Where we've seen a lot more value and a lot more interesting claims work is in the remediation side on the back end. That's really the newest phase where you're restoring the data or figuring out, where the loss occurred. The breach coach is also really good, working with the forensics teams and determining if any data was impacted and actually stolen, because then that triggers the privacy regulations and the requirements for notification. So the breach coach is also, they're also attorneys, so they know what states you would have to make a notification and in what period of time and how quickly. So, everything works really well together. And then the last phase is on the business income side. The business income negotiations are very similar to a property claim that had a fire loss, and, you're negotiating BI, but the resources that are available, the use of outside consultants to help you, figure out what your true BI loss is. I mean, these are all services that if an insured were to try and figure out themselves, they would pay a rate that's probably triple or 4 times, what they're going to get using the insurance carrier rate. But, they wouldn't even know where to start to get credible resources and information. So the policy provides a lot of invaluable services at the time of claim, but even before, there's a lot of things that the policy does that really could help them if they took advantage of it.
I'm not sure which one you want to jump on this, so feel free to sort of fight over the whoever gets to answer this question. But talking about sort of the changing in coverage, what's going on there, right? In terms of what kind of adjustments are we seeing, and I guess maybe more importantly, what I'm interested in is what limits are people maybe buying, or what limits should they be buying, right? Like, are we seeing agents properly quoting this stuff to handle the company's risk, or are we just sort of not seeing the adequate coverage being placed, or are they having a hard time getting? I guess all of that stuff is on the table. What are we seeing around that?
Manny, feel free to go first here.
Thanks, I appreciate it. So, I mean, we're definitely seeing. I think the history of cyber, my colleague Steve Robinson has done a couple of white papers around this, but he calls this the teenage years around cyber. We had a number of years of almost static growth in the industry, and then we hockey sticked, and we saw dramatic growth. And as new entrants came into the market, we really expanded coverage into some areas with very little, if any, underwriting. Sorry to the audience that believes in this, but system failure is just a ridiculous coverage to put on a cyber policy. If it has nothing to do with an attack, it's just, if something goes wrong on your system, we're going to pay for it. Nobody covers that. So I think there's definitely a trend. I think that carriers as a whole are looking at, what coverages they're providing, but even with all the stuff that was thrown in as bells and whistles, the predominant loss was coming in ransomware, funds transfer fraud, really the traditional mechanisms and traditional coverages. We are seeing carriers implement more underwriting and some underwriting discipline to what they're looking at. There's more stringent requirements around controls that insureds need to have. So now it's just not accept everyone. It's, accept a very select group of insureds, especially in some higher risk areas. I think it's definitely going to be more of a trend as the year ends and as 2022 creates some new challenges or some new way that the bad actors are trying to get in. The carriers are going to have to react, because at the end of the day, they have to be profitable in this line of business to continue. So we, as a broker, we kind of look at all those situations, and then in terms of limits, a number of insureds in the past would love to buy as much as they could in the market, but as much as they could be very restrictive now going forward based on your class of business, your controls in place, and the size of risk and really the appetite that underwriters might have to put up capacity. In the past, a lot of carriers were willing to put up 10 million limits. Now, 1 to 3, trying to get a 3 is a stretch. So we can't build towers as easily as we could before. It's just more limited and a little more difficult to get to the same, same level of coverage even that you had last year. So it's an evolving market. We use some in-house information that we have proprietary to us about limits purchase and in different segments. We have partnered with some other vendors to help us along that line as well to help give guidance, but really it's just limits purchase is kind of a tool that we give to insureds to look at around peer analysis. But at the end of the day, it really is up to them in their internal business continuity planning to understand, what the potential risks would be and how much they really should value. So very similar to other lines of business on the traditional property side, you should know how much you could lose if something goes down, and that's a limit you should look to purchase.
Just to comment on Manny's response, from a carrier perspective, we see certainly an increase in demand because of this sort of retraction of limits available in the market. Certainly seeing a lot more excess submissions coming in, and obviously we know the reason why the situation is what it is there's been a huge increase in ransomware losses particularly, and so the profit margins in the market have shrunk quite a bit, and as a result carriers are in some cases pulling back on limits. There's also generally a continuous increased demand for tech coverage because technology is a pretty fast growing industry. So it's on average growing faster than what we've seen other more traditional industries, particularly with all the lockdown we've been going through. Technology's become even more important, and dependency on it has become even more significant. So there is more demand, but also the terms and conditions of the market are driving up that demand and awareness of cyber risk overall as well.
So Jacob, I want to kind of break it down a little bit in terms of like the different segments that sort of qualify under the technology branch of this thing. And there's really only just a little over a handful of them. If you're an agent out there looking to sort of target one of those or maybe two of those, from your perspective, where's, I guess maybe the better question is, where's maybe there more adoption? Where's there more sort of open-mindedness to this coverage in those different areas? And where should agents really be focusing their time, I guess, is the ultimate question.
Yeah, I mean, different carriers sort of define technology in different ways. We've put it into these 6 buckets. Traditionally, the buyers of tech E&O coverage have been obviously the software providers, and then after that the tech service providers. So traditionally those would have been sort of the IT consultants, but now with everything sort of migrating to the cloud, those services have sort of changed. So it's a broader spectrum of services that fall into that bucket. The newer aspects of tech, social media, on-demand services, they are probably among the faster growing, but they're maybe still not as sort of open to either buying coverage or knowing that they have to buy coverage. So we're not seeing as fast growth in those sectors yet. One area that some carriers maybe not consider part of tech is the manufacturing piece. So electronics manufacturing, hardware manufacturing. That's something we've insured for a long time. So that's part of our view of what is tech, and that's been a consistently buying subsegment of tech as well. And then we have a reasonably big footprint in the tech E&O space as a carrier, and telecom is another area that we've traditionally insured a lot of. So we sort of sit across all those 6 buckets, but realistically, software and services make up 70% at this point. Maybe that'll be a little bit more balanced as social media and on-demand services sort of continue to grow pretty fast.
Manny, from our side of things, is there one area that stands out in terms of just usually provides maybe a little bit higher margins in terms of like the effort that it takes to get it through just the overall who you're doing business with? Is there any one of those areas that you would sort of highlight as we've seen in terms of having better success with?
We see submissions across the gamut, probably, less on the manufacturing side because I think the traditional P&C direct carriers like Hartford, they have a good pipeline into the retail agencies, and there's not a lot of markets that look at hardware E&O to begin with. So once you take out the direct carriers on our side, there's a handful of markets that can even consider it. So it's probably the most limited class, but we're definitely seeing more interest, in the on-demand services, on the social media side. The new internet advertising is sort of in these These click-through companies are definitely the other element that we're seeing a lot more, and that kind of straddles the line between MPL and tech based on the technology that they use. We're seeing software services, a lot of outsourced management come our way because they don't hit the traditional buckets for a lot of traditional carriers. So when it comes to the wholesale market, I mean, we usually don't get to see all the nice, pretty software prepackaged stuff that Jacob and his team will see first. And then, we tend to see things that are a little bit more in the shades of gray and tougher to put in the box.
All right, if I want you both to sort of take a stab at this, but if you had to give sort of one overarching highlight or thing to focus on when having this conversation with the clients of increasing success, whatever you want to call it, but the one thing that if you had to tell an agent, this is the thing that I would tell you to sort of work into the process. What is that thing, Jacob? Let's go ahead and start with you.
Well, it's hard to just isolate it to one particular thing. I think cyber is always going to be part of that conversation. I think that's increasingly why we're seeing, even if there hasn't been a huge demand in sort of maybe the manufacturing aspect of tech, I think the cyber aspect of it is driving more demand now because they need cyber coverage, and since they can buy it with tech and get those coverages together, you're seeing a little bit of an increase in demand. But I would say on the tech side, it really depends on which segment this company is operating in. The exposure is very different by segment. With technology, with software and services, you've got interruption risk more so. It used to be we saw a lot of breach of contract claims from failed implementations or sort of negligent misrepresentation. We promised more than we could deliver, and that's really transitioned into more of an interruption related risk as we see everything delivered through a cloud or internet delivery model. So that's more the key. But at the end game is it's still breach of contract. If you promise to have 99.97% uptime, and then moving into the manufacturing segment, it becomes more the traditional sort of batch defect or individual component defect type of claim. You would see social media, more privacy driven, claims relating to third party content put on the platform. And there's a lot of complexity around the immunities provided to social media platforms. We see this in the news a lot with where the boundaries, right? So that's not easy to navigate, and that's a good reason why you'd want to have your tech coverage and privacy coverage together as well. So it really depends, but consistently over all the years we've insured tech, we're still seeing the same claims: the intellectual property infringement, the breach of contract claims, the failure to deliver claims. That's been consistent. What's had an uptick is obviously the cyber piece, and cyber wasn't always a part of tech. That's more of a recent development in the last 3 to 5 years. You now can get the same coverage you would get in a cyber policy embedded into your tech policy, which is convenient.
I mean, what about you?
Yeah, I would definitely mirror Jacob's comments. I think, if you're looking to buy cyber and if you're a tech company, then you should just buy it together. I mean, the incremental, if you bought the policy separately, you would pay a lot more just for, a standalone. The ability to bundle the two together and really consolidate limits. If you don't feel you have a big exposure, well, it's almost like you're getting it thrown in for a couple hundred or maybe a couple $1,000s. Not a big deal. You got to buy cyber anyway. Add your E&O. It really is a fail-safe. I mean, once again, for me, I look at it as a protection of assets. Your precious asset is your capital, and you're going to spend a very, very small amount to protect that capital moving forward, and it's a good investment that most companies should look to make.
All right, gentlemen, I got 3 more questions for both of you. We're going to have some fun and bring it on home. Okay. The first one, what's one thing you hope you never forget?
One thing I hope I never forget, other than my name, I think, I guess the next one is my girlfriend's name.
Fair.
All right, Manny, how about you?
I mean, obviously, I hope you never forget your family, but I'll say in a very in a broad sense, how to be grateful. There's a lot of things in this industry, and absolutely over the past couple years, we've probably taken for granted, and we've definitely learned to be very grateful about all the things we have and the people around us. So, never forget to be grateful.
All right, Jacob, then how about one thing that you still have yet to learn?
There are many things, and I think focusing on the topic here, cyber and tech keeps you learning, because it's not static. It keeps changing, and that's what's really challenging about it, but what's also really exciting about it. And that's why we, as insurance carriers, and Manny, and you guys as brokers, we have to keep ahead of the game and offer innovative solutions, offer value added services around those coverage solutions, because it's not enough with coverage when it comes to cyber. You have to help the customer all the way, and I think preventative services is becoming that new innovation. It's not something that's happened in the last 6 months. It's been on the way for years, but now I think there's more appreciation than ever for those services.
Manny, what about you?
My answer is going to be a lot less simple, but I agree with Jacob. There's a lot to learn in this field for sure. But I'll just keep it simple and personal. I'm Korean. I've never really learned Korean, so that's the one thing
Hmm,
that I've yet to still learn. I'm trying to go off some apps, not working well right now. So
interesting. All right.
I always wonder about those
I,
apps.
yeah,
What is it they promise? Learn language in X number of days. I'm not sure about it.
yeah, I'm well past that X number of days right
right.
now. So.
All right, gentlemen, last question to both of you. And Jacob, if I were to hand you a magic wand of sorts to reshape, change, alter, speed up really any part of insurance, what is that thing? Where is it going? And what is it doing?
Well, I think we're already doing it. It's making the procurement of insurance easy, first and foremost, and that's the RPS platform as an example. It is, just going through a few steps to get insurance, because let's face it, if you're a business, that's not your main focus. You're focused on driving growth, and revenue, and insurance is some necessary evil that you don't want to have to deal with. It's an administrative burden. So if that can be made really easy, through the agent helping a particular policyholder, going onto a platform, answering a few questions, and validating those questions with the policyholder before binding, then um, I think we've made some people's lives a little bit easier. And that's ultimately, I think, the goal of insurance is provide good coverage, good services around that coverage, but let's make the process easy. It doesn't have to be that difficult, especially for small business.
So in many ways, I agree with Jacob. It'd be nice to have things more efficient. So from a speed perspective, I think even from 5 years ago when we, really came out with the newest version of our portal, to where we are today, the technology is incredibly different. The use of APIs. I mean, I think that is going to continue to drive the industry. But in many ways, I also wish we could slow down a little bit because I think just the ability to because we're getting so much in so fast, so easily, really the ability to slow down and look at risk and, evaluate and even to have conversations with your underwriters and, with your clients. I really think that is the opportunities are shrinking and diminishing and becoming, fewer and far between. So, on one hand, I'm happy about how we're speeding things up from a efficiency perspective, but I wish we could slow things down so we could, kind of rekindle the social side.
Jacob, Manny, this has been fantastic. I'm going to leave it right there.
Awesome. Thanks,
Thank
Joey.
you.